Good morning, I'm Otto Basekong, Team Lead News Proshare, and your program host for today's webinar. Thank you for joining us. I welcome our speakers and guests to the 4th edition of Proshare Economists Conference webinar with the theme, Nigeria's Reform Path and Transition Gaps, the Economics of Renewed Hope. Our audience today cuts across policymakers, operators, regulators, analysts, and other individuals from different walks of life. We would like to take this moment to pay tribute to the former president of the Federal Republic of Nigeria, Muhammadu Buhari, GCFR, who died at the age of 82 years in London, United Kingdom on Sunday, July 15, 2025, and will be buried this afternoon in Daura, Katsina. Also in the same vein, we condole with the Ijebu people and Ogun State governments over the demise of Oba Sikiru Kayode Adetona, GCON, the Awujale of Ijebu land, who has since been buried. We would like to observe a minute's silence in honor of these great leaders. May their souls rest in peace. This conference aims to assess the impact of Nigerian economic reforms under the watch of the administration of President Bola Tinubu, GCFR, 2 years after, the shifting dynamics in the uncertain global economic landscape, and the outlook for the rest of the year, evaluating both the opportunities and threats. Before we begin, permit me to set out a few housekeeping rules to guide the webinar. For all technical issues, kindly use the chat forum and direct the same to the host. All attendees' microphones are muted to prevent interference. You can submit questions via the Q&A icon. Decorum standards within our governance ethos are in place and will be activated even as we encourage everyone to express themselves. Finally, do note that this webinar is being recorded and live streamed on Web TV, YouTube page, Proshare X, and Facebook platforms. As a measure of the citizens' pulse, we will be conducting 4 polls intermittently during the webinar, and the results will be collated for public release a day after. By attending this webinar, you acknowledge and agree that your participation will be recorded, including any questions or comments you contribute during the session. Proshare may use the recorded content for research, educational, or future webinars. On this note, please permit me to welcome the chairman of Proshare, Mr. Lufemi Aweyemi, MNI, for his opening remarks.
Thank you, Otto. Good morning. It's a pleasure to welcome our esteemed colleagues, distinguished guests, panelists, and participants to the half-year 2025 edition of the Proshare Economists Conference. The conference, as Otto explained, aims to assess the impact of the Nigerian reforms 2 years after. This is premised against the shifting dynamics in an uncertain global economic landscape and provides an outlook for the rest of the year, but with emphasis on identifying both the opportunities and the threats. The esteemed panel who will be joining us will help us address the transmission gaps between positive macroeconomic metrics and the negative microeconomic metrics arising from the implementation of far-reaching, and I dare say, necessary fiscal and monetary policies, seeking a way forward for attaining an inclusive and sustainable economic performance. Before we go into the short presentations that will follow, an extended exchange of ideas, permit me to share a few observations from my desk. Growth and development are eminently desirable attributes of emerging economics, but from my careful study of the socioeconomic history of societies, I am convinced that being bold is the only path to being better, especially at the point of inflection of change that can upend the current order of things as we see. The fear of doing the unusual or the unpopular cost nations years in lost economic growth and development. We can ill afford that. May I recall that in the mid-70s to early 80s, there was also a stiff resistance to emerging Chinese economic reforms, as the long shadow of Chairman Mao Zedong's command economy loomed large over the country. To most then, the concept of free market allocation of labor, capital, and land was fictional. 4 decades after the reforms, China has become the second largest economic power after the United States of America. Nigeria could borrow a few pages from the Chinese, and I dare say the Indian economic reform playbook, and prepared to be equally big, bold, and better than we have done. Although the location of the economic game board may have changed, I believe that the playbook remains basically, if not totally, the same. That is, to drive progress, leaders would have to cultivate fresh thinking and take bold actions by challenging assumptions. It is important, therefore, that a willingness to take calculated risk and a commitment to learning from both success and failure is what separates winning nations from laggard nations, as we have seen. A major challenge to Nigeria's steady growth had been the absence of clarity of purpose. Politicians and technocrats alike have been trapped in a whirlwind of unanchored campaign promises, untested theories, and questionable but self-serving project initiatives. To move forward, we must avoid allowing these roadblocks to be a limiting factor. In a book, Professor Yong Yang spoke about how China escaped the poverty trap. She explains that China was deliberately focused on the actions that needed to be done to raise living standard and economic beings of citizens. I believe our current government also has the same aspiration. Indeed, Nigeria has to reimagine its growth and development strategies beyond rhetoric and for playing victims of the past. To do this, we must recognize the political cost involved and insulate the technocrats who are able to bring fresh approaches to what have become traditional and frustrating challenges, thereby enabling it to reposition itself. Whilst the government has done well in finding a few quick fixes, it must now create what I consider a GSM moment in a short list of industries, supported by long-term strategic solutions that elevates the new private sector compact it sells on its investment road trips. Nigerian household has had to bear the heavy burden of the government policy reforms thus. Therefore, easing that burden must be a major priority to ensure social stability and support productivity. At the last conference, I advocated for a whole-of-government approach towards public policy design and implementation, given that the fragmented policy implementation work that we see today needs curing, something manifestly evident with our budgets and something confirmed by the IMF just a few days ago. I equally explained that the government needs a more progressive approach towards its engagement with the markets so that a focus on long-term capital to fund critical infrastructure can be achieved, say through leveraging idle public asset deal rooms and books, amongst other options outside borrowing. Today, I believe 2 years of talking is more than enough to set the direction and tone of public policy. It is now time for decisive, deliberate, and intentional action that translates to improvement in the broad welfare of all citizens and enterprises. Finally, I believe, therefore, that this conference will address this issue squarely and propose a few alternative approaches that the government could adopt to improve economic growth and welfare over the next 2 years. The requirements for bridging the gaps we see are now more about economic spreadsheets than political rap sheets. I wish us all a productive deliberation. Thank you.
Thank you very much, Chairman, for your insightful remarks on the state of the economy, particularly the need for us to reimagine growth and development strategies, understanding the political costs, integrating the right technocrats, and like you said, we need that GSM moment. And most importantly, we need policies that ease the burden of households. It's very critical at this time. Thank you once again, Chairman. Our panel of discussants for this conversation are Dr. Ayo Teriba, CEO, Economic Associates Limited, Dr. Tokwe Fashwa, Special Advisor, Economic Matters to the President, Mr. Yomi Olubenro, Partner and West Africa Tax Leader, Deloitte, and of course, from our in-house, Mr. Teslim Shitabe, Director of Research, Proshare. It's great to have you on board and we'd like to acknowledge you this morning. Thank you all for joining.
Thank you for the invite.
Just to be here.
Thank you very much.
Very much welcome.
Thank you. Let me begin by giving our panel of discussants the opportunity to give their opening remarks on the state of the economy. It would be nice to just get your opening remarks amid the current reforms, and that will take each for 2 minutes. So let me start with you, Mr. Yomi Olubenro, your opening remarks on the state of economic reforms.
Yeah, so it's been quite some tough period for the economy. We are midway, irrespective of how you look at it. It's half year, and it's essentially halfway into the new administration. I think what we've seen in the first half It's quite a lot of transformative, quite a lot of bold, and daring reforms and steps taken to recorrect quite a number of the macros and reset the economy. It obviously came with the usual short-term pain, which you cannot avoid or eliminate in the real sense of it. If you look at the depth and the complexity of the issues that are being addressed, so we've gone through some tough moments, but I think in my view the worst seems to be over. I think things are stabilizing, and what we really need to do is to latch on, the very solid foundation we have now. And quite honestly, I think what will happen over maybe the second half, either of the administration or even the second half of this year, will essentially be determined by what additional steps we then take to, one, stay the course, but also more importantly, now see how to ensure that the trickle-down effect, actually then touches the household and touches the individual. So for me, I think we're on the right path, we're on the right course, but the journey to getting the citizen and Nigerians really feel the impact, because it's not so much of getting the macro stabilized is critical. But the macro stabilizing and all of the reset, it's just one half of the step, or one step into the journey, until the benefits start trickling down, until whatever the broader macro reform is meant to achieve, until we then take the right steps. If you look at all of the reform from subsidy removal to exchange rate, unification, and all of that, everyone across whatever sector of the political divide that you are, everyone seems to be in alignment that these are important steps and these are necessary steps. Now, but what do we then do with, funds are now more available, exchange rate is it's stable. How do we then ensure that we continue to engage our government and our leaders at all tiers of government, for that matter, to make sure that those additional funds, those additional resources continue to be channeled to infrastructure development, continue to be invested in human capital development, continue to be used in ensuring that the economy rebounds. So those are the journey after, but I think we are on a solid footing.
Thank you for your opening remarks, Mr. Yomi. I would like Mr. Teslim Shitabe to take it from here in 2 minutes. Your opening remarks around the state of economy amidst economic reforms we're having.
Thank you very much. Also, good morning, participants and fellow discussants. I think Yomi has stated it quite succinctly. There have been some motives based on the government's boldness to take urgent steps. For instance, the removal of the fuel subsidy. That was done, and yes, it has translated to an inflationary spiral initially, but it was necessary. Removal of the extra subsidy that has subsequently led to the harmonization of extra BDC and the official, that was also an increase in domestic prices. The macros look good, but the micros still remain a significant challenge. Yes, we did improve the minimum wage rate. We moved it from 30,000 naira to 70,000 naira. But when you adjust that for possibly be worse off, they could possibly be better off than the person who earns 70,000 naira currently, because of the inflation effects of the removal of subsidies. But generally speaking, the economy is nudging itself towards the right direction, but there are things that need to be done. And I think that within the course of this conversation we had this morning, we will make some recommendations, and we'll be bold enough to, if necessary, take certain detours. Like the chairman had pointed out earlier when in his discussion, there was a time China actually had to do a detour in the 1980s, and but they were consistent, they were dogged. And so under Xi Jinping, we've seen an improvement then, and under the current Xi Jinping, we've seen a greater improvement in the Chinese economy, such that they're currently the second largest economy in the world. So I guess I'll yield the floor at this moment. Thank you very much.
Thank you very much, Mr. Teslim Shitabe. You also agree that there's been significant macroeconomic reforms, but the micro is to feel that effect, and of course, still trickling down to households. Whatever you do in reforms must impact positively on the households. And that brings me to Dr. Tope Fashwa. You are in the corridors of policy and governance. You've heard so far what has been said. We've seen bold economic reforms, we've seen steps taken, but the trickle-down effect is important. But from your perspective, from the government side, how it has been based on the views that we need to see more impact on the households.
Thank you very much. Thank you. I hope you can hear me.
Yes.
Yeah. So very quickly, of course, every speaker has acknowledged that the government of President Bola Ahmed Tinubu has taken on some very bold reforms. Perhaps the Can you kindly mute Dr. Teriba for a second? Anyway, so we've taken on some very important reforms. These are driven critically by the president himself. And so kudos to the president. It takes leaders like that to be able to swing this kind of, because they're sometimes not very popular reforms. However, they are necessary reforms. It's like in those days when we were growing up, they would give us Nevaquin or chloroquine and all of that when we had fever and so on before innovations came. And of course, they were bitter medicines, but they needed to be taken. Of course, most of the speakers have also acknowledged the fact that the macro angle is looking a little bit better. Indeed, much better than used to be the case on the macroeconomic side of things. But of course, there's still rhetoric on the street and narratives on the street about increased, poverty in some instances. Some of those numbers can be questioned. And so, however, we know that certainly these kind of reforms will cause that kind of thing. Now, in 2 years' time, I would say that the government hasn't done too badly. And we seem to be on a trajectory. And whether we're looking at it from the angle of, slightly increased foreign reserves or better ratings from rating agencies or stability in the value of the naira or even trade. For almost 2 years now, we've been recording positive trade surpluses. The last time was about $11 billion. Between 11 and 16 billion dollars indeed in 2024, and we are on the trajectory. This first half of this year, we recorded about first quarter indeed. We recorded about $5 billion. So we meaning that this year may even be better. The reforms have sort of repositioned a few sectors. One of them, of course, is the petroleum sector, where we have now become sometimes a net exporter of refined products than we bring in. And of course, this has also affected our, the import and export mix. Indeed, because, for example, we used to import $25 billion worth of petroleum. The last number I checked, as at December 2024, that has dropped to 10 billion. We've eradicated about $15 billion of imports of refined petroleum. And of course, the target is zero, because we should be able to produce as much as we need ourselves of refined petroleum in this country. Even on the export side, of course, we're selling more of, we're beginning to sell more of our crude oil locally than exporting them. And of course, as of 2024, I also saw that the second highest export from Nigeria, which used to be sometimes, it used to be, sometimes we see things like derivatives of crude oil being exported, or even gas, LNG. And, this time around, it was actually cocoa in 2024, which we exported 2.6 billion, which was, used to be about 600 million to 800 million, went up ×3, and that's very remarkable. And of course, we're doing very well on agri sector and so on. So anyhow, the thing is this, to say very quickly that this is not the time to change course. This is not the time to change policy. This is the time to guide policy, and that's why some of us are here. to guide this policy to ensure that, number one, we're disseminating enough information to the people of Nigeria to let them know that nobody is out to punish anybody. Number one. Number two, this also may be a time for repositioning to say that the opportunities are everywhere. There was even a policy on Buy Nigeria, which tends to focus our spend in government and even outside of government on made in Nigeria, and produced in Nigeria. So this is a great opportunity. This time's a time of considerable transition and change, and opportunities are emerging. Some sectors have repositioned. I mentioned the petroleum sector earlier on. Some local entrepreneurs are doing very well, better than they used to do. For example, I see people doing very great in fashion because importation has reduced by 40%. Nigeria's imports level reduced 40%. I mean, we had about $54 billion in terms of export. That's, the official number that we get, And of course, on the flip side, we had about $41 billion of import. It used to be flipped around before. It used to be that we would import 50 billion and struggle to export maybe 45 billion. And so on. So these are opportunities. I mentioned pool in the fashion sector. I mentioned the agri sector, cocoa, sesame, cashew nuts, and so on. Even people who are in the catering business, because I think the critical import of President Bola Ahmed Tinubu's reform, especially on the Naira, was to focus us on made in Nigeria, was to encourage Nigerians to produce more, to meet local needs. If we had 200 million people, that's a great domestic economy that can be served by us, for us, by us. And I think that's where we're going with these reforms. And I think that if we're given one more year of monitoring and guiding these reforms, perhaps we'd have a very, very different story to tell. Whereas no nation has been able to totally eradicate poor people at all in their country. But I think we'll give it a good shot in Nigeria. And I think I'll end it at that point. Perhaps I'll have more time to speak about other things. Thank you very much.
Yes, Dr. Fashwa, thank you very much for your perspective from the government side, what you've been doing. You talk about guiding policies, very important, and repositioning the economy. You've reeled out some figures. I'll follow up with this, and then Dr. Teriba will come in. In terms of policy, what are those adjustments that are needed, even as you're already carrying some reforms that will ensure that we have fiscal and monetary policies translating to tangible improvements in the household welfare and the SME growth? You will be guided in the next 4 minutes on that. I also know that you have a national assignment. We are aware of that, so that's why we're taking this follow-up with you.
Well, in terms of getting to the grassroots, getting down to the family unit of the reforms, like I said, first of all, when you take on macro issues, okay, you're wrestling the elephant at that point in time. And they say when two elephants wrestle, the grass suffer. However, it gets to the point where you get rid of the elephant and start to look at the grass and the little animals that are also at the background. And I think that's where we're getting to. So first of all, again, I think that apart from initiatives like minimum wage that the government has done, increasing minimum wage, I personally, I've been at the vanguard of saying that, this minimum wage is not just a public sector thing. Nobody should. It's a law of this country. And the other time we found out, it was posted on social media, a certain filling station in Abuja here, just about a couple of months back, or even one month ago, that was still paying their people 10,000 naira. You walk in the petroleum sector downstream, and you're paying your people 10,000 naira under what excuse? So it's easy for us to see a scenario where people are exploiting people, and they're able to say, it's the government that caused it. The petroleum sector, everybody makes their margins, okay? And what you're saying by paying people 10,000 naira per month is that you're telling them to go and steal and to cheat customers that come to your filling station. So I've been at that vanguard of saying, this is also a private sector thing, but people must try. And those who are exploited must also speak up, So we're disseminating this information. There's a minimum wage. Of course, very importantly, the tax reform has been signed. And as you know about the tax reform, which will kick in about maybe 6 months' time or before, about 5 months' time, what we know about the reform is that the reform is totally pro-poor. People who are earning 1 million naira and below per annum in this country will be totally tax-free because there's 800,000 naira that's protected and 200,000 naira of rent allowance that will be given. That's 1 million naira plus, are totally exempted. The same tax reform says that 25 people who SMEs that turn over 50 million and below. It used to be 25 million, but now 50 million. We increased that by 100%. I'm on Taiwo Dele's committee on fiscal reforms and tax reform, and we deliberated for over 1 year. That document was sent to the president, and then to the National Assembly. That's been on for about 6 months. And so it takes time to get critical reforms. We have a very pro-poor reform, that actually thinks about the poor people in this country, that thinks about those who are struggling. But it's not over until it's over. There's got to be direct advocacy, private sector compliance, as I mentioned before, and then of course there's liquidity at the state level. I was discussing with someone just yesterday, and it was the second or third time I was hearing that many contractors now understand that it's better to do business at the state level than at the federal, because the states are awash with cash. They need to do their local infrastructure. There is a buy in Nigeria policy on ground, which says that you must first of all give the local contractors before you start to look for foreigners and so on, and this must be done. We keep our money within our own country. I mean, you mentioned China just now, and that was what the Chinese did. They kept money within their country and ensured that money circulated within their country before taking money abroad. So, the total culmination of this policy and of the raison d'etre, the reason why the government is here is actually for the people. No government wants to come and make people suffer more. And every government wants to be popular, even though it's almost an impossibility, especially in a country like ours. Government is not about popularity, but governments will try to be popular in ensuring they deliver better living for the people, better standard of living for the people. However, lastly, I want to say this so that you can allow other people to speak.
Yeah.
The world has changed. The world has changed, and we must change with the world. Indeed, it is said that any entity, government, institution, whatever, even human being, whose rate of change is slower than the rate of change in their environment, or even which changes at the same time as the environment changes, is becoming a dinosaur. So even factors of production have changed. When we were in university, even school, in secondary school, they would tell you land, labor, capital, entrepreneurship as the factors of production. But we must note that things have changed radically. We're now in the age of artificial intelligence. We have to bring on other kind of thinking in terms of factors of production. Data is now a factor of production. Time is a factor of production. Information, technology, knowledge. These are factors of production that can stand on their own. And, the whole idea of factors of production is what can you bring together to make money with, to make production with. It can only be about land and labor and capital. And we cannot subsume technology, artificial intelligence and all of that under capital. That is a disservice to the way that the world has changed. We live in a new world. So my encouragement to Nigerians is to say, you know what, let's get thinking. Let's not get bogged down by the rhetoric and the narrative of people are suffering, people are dying and all. In fact, I'm saying that Nigeria, we haven't done too well in terms of owning our own data. I'm thinking that we should actually fund our data the more and not outsource our data. We can't outsource our data to foreigners. We should own our data. We should fund our data because we are the only ones that will be able to tell our story. The data is what tells our story. So every time I hear all of those things like, there's going to be more poverty in Nigeria in 2027, or 133 million people are in multi-dimensional poverty, my thinking is, look, the only way we can change that narrative and that rhetoric is to fund our data and to track ourselves so that the information we're putting out is not that people are dying and people are too hungry, but to say that, look, we've taken 10 million people out of poverty. We've taken 20 million people out of poverty. We need a proper poverty eradication program, okay? Just the way the Chinese have. We understand that the Chinese seem to be doing a little bit better than the Americans lately. But one of the things the Chinese did was to own their data. India is owning their data now as we speak. 58 million people disappeared from their poverty list in a couple of years back. But the truth is, I believe that there are so many more poor Indians than there are poor Nigerians. They have a 1.5 million population. So,
thank you, Dr. Faswa.
So very importantly, and I'll land on this. So just to say that we need to own our data, we need to own our data, and we need to, and the story we tell us about ourselves is what matters. Thank you very much.
Thank you very much. I've heard you very well, Dr. Fashwa, talking about the need to own our data, to have a poverty eradication program and strategy, and of course, ensuring that we tell our story in a way of the positives of impact. But as you know, this is a very rich conversation, so we'll get various views and assessment of the economy, and this is why we have all sides to be on this conversation. I would now like to invite Dr. Ayoteriba. Yes, Dr. Teriba, based on what has been shared so far by the panelists, if you can provide your perspective on the state of the economy and its current trajectory for growth and sustainability. All right, we'll get back to Doctor. I guess, yeah, he's trying to join. But let me ask you, Mr. Olugbenro, as a member of the Presidential Committee on Fiscal Policy and Tax Reform, what are the high points of the 4 acts that can revitalize the country's fiscal space? What incentives are built into the new acts to make businesses competitive? You've heard what Dr. Fashwa said about trying to be bold in reforms.
Thanks, Otto. And I share that view as well. The tax reform, or the 4 bills that were signed, we've seen in our fiscal space. There are fundamental departures from some of the challenges of the past, and quite a lot of corrections of many complaints that we've always seen. And I can touch a few of them, but it's really a law that the benefits will span through the immediate, the medium, and in a long term. The first one I usually like to highlight is that for a number of investors and for a number of for the economy generally, there is a huge benefit that is going to be coming off this reform from the certainty, the clarity, the simplification that the harmonization and the consolidation offer, right? So even though we talk about 4 laws being passed, the day-to-day interaction with taxpayer is essentially just going to be with 2 laws, right? The Nigerian Tax Act and the Nigerian Tax Admin Act. The other 2 laws are essentially establishment law, the one that establishes and specifies the powers of the Nigerian Revenue Service, the old FRS, and then the one that established the Joint Revenue Board, which is the old Joint Tax Board. Those 2 laws are more of the the provision for the administration, from the body perspective. But in terms of the interaction, in fact, the principal law the taxpayers are going to be interacting with is the Nigerian Tax Act. So by repealing and replacing numerous laws, the law now provides a single point of reference for taxpayer and for investors. So this is simplicity, this is clarity, and this is a direct response to the long-standing issue of ambiguity, overlapping, obsolete provision that we've always had, that is at the core of the challenges of doing business and paying taxes in Nigeria. So for me, that is number one. Now, number two, the law also, brought into our fiscal space some fundamental game-changing provisions, and they cut across tax types. For businesses, for example, if I give you an example, and especially service provider, if you look at the reform we've had with our VAT, the provisions that allow full and complete recoverability of input VAT on all purchases, whether it's on services, whether it's on overhead, whether it's on capital expenditure, it's a huge cash flow give back, to the business, because it improves, the ease with which and the speed with which businesses can recover input VAT paid. Before, unless you are a trader or you sell in fixed goods, you can't claim input VAT. All right. And then additionally, some goods, and services that were previously exempt, from VAT. And for those who know the law, when you say an item is exempt, it has a complete different impact in terms of your ability to claim input VAT. So they are now classified as 0 rated, which means despite the fact that you don't have the obligation to account for VAT when you are selling, whatever input VAT you have paid from the input is fully recovered. All right. And if you go to the company taxation itself, there are principles like what even qualifies for expenses to be deducted. All right. The subjectivity in the previous laws that make the Revenues Authority to decide what expenses are reasonable or necessary for a businessman, it's no longer there. So based on the new law, there are, the provision now says all the expenses you have incurred that are wholly and exclusive for the business, is liable for deduction. And you can go on and on. If you touch on the personal income tax, the recalibration that Dr. Fasua spoke about earlier, with adjustment that is aimed at enhancing, the equity, and progressivity in our law, it's a significant give back. The exemption of low income, earner, the SME exemptions, that you've had, they will not only be exempted from paying income tax, even the burden of having to account for VAT, all of those obligations. Now, what does this mean? This potentially translates to, more disposable income in the hand of individual, ability for small businesses to then, employ more, plow back, those earnings back into their business and help to galvanize the economy. So those are fundamental provisions. And we also have provisions that touch it, that revises the whole of our priority sector. All right. So there are now priority sector tax credit that makes investments in mostly all manufacturing activities to be entitled to tax credits. The amount of investment you need, the sunset rules are all clearly laid out. So these are, in recognition of the importance of, how do we jumpstart the economy through small businesses? How do we look at ailing businesses? There are also provisions that touches on businesses that are struggling. There are provisions around a priority sector. There are provisions regarding even free zone, non-resident companies, non-resident individuals. So different provisions that just essentially drives the fairness and equity. Even where we think penalties are becoming stiffer, against infractions and all of that, if you look at it holistically, it's meant to provide an even more balanced and equitable space for those who are doing the right thing. So we really believe that a lot of deliberateness has been invested in making sure that there's a holistic reform, and this reform actually provide a solid foundation for us to open up the economy for investors to be able to do business. And for me, quite frankly, if these laws are executed properly, because that is really where the meat of this issue is, so it will have huge transformative impact. But really, the implementation is the real work. It's okay to have beautiful law. It's okay to have this kind of reform, but a lot needs to change from, the Revenue Authority's perspective, building capacity, changing culture, investing in technology that is supposed to be at the heart of what we're trying to do. No matter how beautiful this law is, not much will be achieved, if we implement poorly. And I mean, we have 5 months now. It was 6 months, given to implementation because of the enormity of the issue. So, and it's on both sides, both the investors, the taxpayers, but also the revenue authorities now needs to be ready. There's a lot that needs to happen from investment in technology. There's a need that needs to happen in, agencies speaking to each other and working harmoniously because of all of the harmonization that has been done, all the power that have been, seeded into the Nigerian Revenue Service. If the revenue agencies will not work together and collaborate and make, the implementation easy for taxpayer, we could make a mess, of all that has happened. And the same thing with
Thank you, Mr. Yomi.
Well. So I think a lot, it can be announced from this, but it's at the implementation that, we will really see how far that we go with harnessing the benefits.
Thank you very much, Mr. Yomi. You've clearly said it that the signaling shows that it's going to be bringing simplicity and clarity and uplift small businesses. But most importantly, the implementation is very critical. And that's what we'll be tracking between now and January 2026. Like I said earlier, Dr. Tope Fashwa would be leaving us in a few minutes because of another national assignment. So, Dr. Fashwa, before you leave in 1 minute, can you give us your closing thoughts?
Okay. Thank you very much.
Okay, Dr. Tereba is back now. Yeah.
I would like Tope to hear a bit of the things I have to say.
Okay,
Since
then, Doctor. Thank you.
He's the one representing the presidency.
Thank you, sir. Thank you. It's glad to have you back now.
Dr. Fashua.
Yes, sir.
Thank you for making the time to be with us.
Thanks.
And chairman of Proshare and his team and distinguished audience. Good morning. It's a very vital opportunity to be here. Although the title says impact of reforms, I think we should be talking about the progress, of reforms. Impact, lag itself will often be longer than 2 years. So we are talking of reforms that have been undertaken in 2 years. Let's not be in a hurry. Truth be told, even action lag in many realms of economic policy reform will be longer than 2 years. That if after recognition, after decision, the time it takes you to act is longer than 2 years. So let's just say progress. And in that regard, there are significant areas in which the president of the government of President Tinubu is commendable. That history will be eternally kind to them. And in areas like the foreign exchange market reform, the unification, the transparency, the stability, and now the reserve adequacy in terms of adequacy of net reserves that has been achieved only in the space of 2 years is commendable. And Nigerians are benefiting from it already. You could see some business segments are thriving, not only domestically, but globally. And that, will be sources of benefit, not just macroeconomic benefit, but also microeconomic benefits, since the businesses that are currently thriving are employers of labor and they are payers of income to people in Nigeria, and that will deliver microeconomic benefits. So that's overwhelming, actually. That's one area of reform that has been overwhelming in just a space of 2 years. And you are hoping that they will, keep that gain in the second half of their first half. The other area in which the president has also made remarkable progress, though unexpected, is in the reform of energy supply, whether you are talking of petroleum products or of power or gas, and indeed even telecoms. You could see that the cost-reflective reforms, which you can also refer to as subsidy removal, now make suppliers thrive. If you need evidence, Dangote refineries currently thrives because of the reform of those prices, and is able, to even be, granting price reduction, and is guaranteeing that it will distribute its products all over the country free. If those cost-reflective reforms had not been undertaken, it would not be thriving sufficiently to give those benefits to Nigeria and Nigerians. And of course, Nigerians are gaining from that. You would hope that the reorganization of the NNPC will mean that government can also contribute its own quota, and the NNPC will stop talking about selling refineries, but will make those refineries work and follow the good example of Dangote. Now, those two areas are gains, permanent gains. They are not reversible. And the government deserves commendation, even if there are people who will deny them and be speaking about the costs of those reforms rather than the benefits of those reforms, which are evident. You look at the telecom companies now; they are thriving, and they have been threatened prior to the reforms. But the area where I want us to also remind the government that perhaps we are not seeing the benefit of reform, and we should be frank with the government. For example, is in the area of fiscal policy, that the outcomes continue to underwhelm. If you look at the full year figures for 2024, government revenue was still 9.4 trillion. In a year that government wanted to spend 35 trillion in total appropriation. In the end, government spent 24.5 trillion. So which meant we borrowed 15.4 trillion and we had only revenue of 9.4 trillion. From what we hear from government officials about revenue boom resulting from subsidy removal, exchange, that's a fact that is not supporting the claims. And of course, this extension of capital projects from 12 months to 18 months, then from 18 months to 24 months, is evidence that the fiscal reforms are not yielding revenue, and therefore the budget is funded more with new borrowings, and unfortunately, more of the new borrowings go to pay outstanding interest, and therefore capital projects remain undone. We need to speak to that. And with all due respect to the members of the tax reform that are on this committee, my tax committee reform that I was on the call, Yomi Olubero and Tope Fashua, I see that tax reform. It's been 2 years, I'm sorry. And it's been in the rhetoric. It's not touched on any reality. And you're beginning, let's not waste our time on things that have not happened. It's a journey. It's been a jolly ride to nowhere. We knew that President Tinubu had 4 years in his first term. We've wasted the first 2 of those 4 years. We are postponing the implementation even after the passage of the bill until 2026 January, forgetting that 2026 is a pre-election year. No government should be proposing comprehensive tax reforms in the year before election. So my suspicion is that this tax thing has been a jolly ride to nowhere in the first 2 years of the government. We have desperate revenue needs. It's not impacting that. And it's been postponed to 2026. 2026 is unlikely to happen as the political tensions are easing up, unless the President Tinubu regime wants to fry itself. You shouldn't implement tax reforms in the year before election. You shouldn't make the same mistake that those who are doing currency redesign, and the rest of it were doing just on the eve of an election. So I suspect that in spite of 80 people and so much funding for that committee, in spite of 2 years spent, we might not see this becoming a reality until the second term, if the president gets the second term, will be my view. And the final is making on transportation reform, not just in terms of CNG conversion and the rest of it, but road construction, super highways, what we call legacy projects, and potential rail projects, adjoined to the super highways. But I would say, given low revenue, given poor capital project funding, you can't rely on debt to do scale. The sooner you begin to rely on non-debt financing, non-tax financing, and oil is not a reliable source of revenue for funding. Equity-based financing, what we were saying about FDI, about domestic direct investment, about PPP, long-term project finance, the sooner we can activate that, get investors come and do what they already did for us in telecoms, what they already did for us in LNG, to come and do it in those super highways, the better it will be for Nigerians. So I see the progress we've made with foreign exchange market, with energy reforms and telecoms. And I'm hoping similar projects in the second half of this first term can be made with fiscal reforms, where you turn to assets that are idle but could fund capital projects. So many real estate projects that are idle, so many infrastructure projects that could actually fund the budget but remain idle. We may wait even longer time for tax to bring benefits. Will be my general view, and I'm glad that Tope stayed long enough, to take these thoughts on board. Thank you very much, everyone, for your attention.
Thank you, Dr. Teriba. You've mentioned that there's in progress in FX reforms, energy reforms, but we need to rejig fiscal and begin to work around how we can turn to assets to unlock wealth. So, Dr. Fasha, I know you're raring to go, but you can respond in 2 minutes. Give us your closing thoughts around this.
Yes, thank you very much. I've already gone, actually. I'm on the road. So I hope that the internet works, but I'll make just a few comments. Well, first of all, to say that Dr. Teriba's comment on the work of the tax committee was an unkind cut. I was a member, and I'm still a member, I believe, and I don't think it was jolly right to nowhere. And I think some of the deliberations, for example, Yomi spoke about input tax, input VAT, which has been the norm in places like Ghana, UK, and all of that, which I know will now come into place. I think that especially the ones that concern people, are very critical, that concern SMEs, that concern individuals. And I think I want to bet with Dr. Teriba that there will be action by January, politics apart. That's that. Also, on Dr. Teriba's, very big idea on equity funding. Look, I think that, the government has heard, not only this government, Dr. Teriba has been on that for a while, and I think it's a very interesting concept. The only problem I see is the fact that, look, this is a political environment, this is a democracy, and you'll be shocked what angle people will come from when you're talking about some of those kind of ideas, especially in terms of selling off assets for equity. People will tell you about sovereignty and all sorts of things that will actually slow down the progress of such an idea. However, if you look at Falomo, former police station, is now being converted, maybe it has been sold off, now being converted to some, high-end thing. It's called gentrification in some parts. It's called redevelopment, whatever you call it. It is a natural process. But, thanks to Dr. Teriba for also pushing those ideas. But I want to tell him that sometimes it may be easier said than done. And there may be many impediments that will come in the way of selling up, because I've seen what people have written about the Falomo project alone. Some human rights people have gone there to video the place, and they're saying that they're pushing the poor out for the rich. And you have to also listen to that when you're a leader. Lastly, I'll say that you were going to ask me a question about debt and PPP. Of course, I totally support public-private partnership. Even though we've not had a very good run in this country, if you look at the case of Bicotny, I was looking at it some days back, the Bicotny Lagos-Ibadan Expressway, Bicotny, MMA2 and all of that. We haven't actually got off on a good start, but it's still doable, in that regard. However, but the debt aspect of that question seems to suggest that we're already overborrowed. Nigeria is not overborrowed. We're running on a false number now of a GDP of $188 billion. This is a $400 billion economy, and again, we've had another delay from the MBS to announce what the GDP is. But I mean, the earlier we start working on a correct figure, the better. But I'll suggest something. Just yesterday, I was looking at another article that was trying to reconstruct the Chinese GDP, and they used several approaches. One of the approaches was trade. And when they looked at the Chinese trade, and they said for such an economy, 40% of their GDP is trade. And of course, they were able to get 13 trillion to 14 trillion of GDP for China. When I did the same for Nigeria, with our trade at about import and export added together almost $100 billion. And for an economy like ours, maybe 20% of our GDP is trade that's recorded. Honestly, I got $485 billion. So that's just an experiment. But in long and short is to say that we can do a lot better. And if our GDP correct one gets released, we are going to have fallen to about 25% debt to GDP. And no serious country sits on 25% debt to GDP, except you don't know what to do for your people. This is a growing economy where we need to build infrastructure and do a whole lot of things. So I would not panic. And I think that this economy is still on the way. We're not overborrowed. We're actually underborrowed and all of that, you know. So that's my last comment on this. I thank you for giving the platform. I'm actually going into another meeting now. Thank you very much.
Thank you, Dr. Tokwe Fashua, Special Advisor to the President on Economic Matters. Thank you for taking out time, and we wish you a safe trip on your national assignment. And it's been interesting hearing your perspective from government and taking note of what Dr. Teriba has shared and other speakers. Thank you very much. So, Mr. Shitabe, you've heard these very interesting exchanges. Dr. Teriba talking about the progress in foreign exchange reforms, energy reforms, but the need for the government to really take fiscal policy seriously, unlock the economy, explore equity financing, turn to assets. For you, with your background also in finance and of course in media and understanding the importance of coordination between fiscal and monetary policy, how can we bridge this gap in a way that macro positively impacts the micro, so the pockets of Nigerians are smiling? Households, the burdens are eased, like our chairman said in his opening remarks.
A very interesting question. But I want to quickly go to what Yomi had talked about in terms of the tax reforms and the release of additional cash flows to smaller individuals and businesses in the economy. Now, while what Yomi said is quite interesting, one of the challenges I have is not just about implementation of those tax rules. It's basically about communication of the tax rules. Because it's interesting to tell people that, look, you know what? These are the benefits from the new tax law. But if I don't know how to interpret those benefits, it really doesn't come to much, does it? Because I'm oblivious. It exists, but I'm oblivious. So I would like to have Yomi explain what's in the works in terms of communicating those benefits to the small-scale enterprises. We've got 56% of Nigeria's businesses being small-scale enterprises. So how do you communicate the benefits and the responsibilities associated with those benefits to those enterprises and to individuals, so that the person who earns a minimum wage knows that, look, I'm not supposed to pay tax. So if his office decides to charge him a tax, as is the case currently, he knows, no, I'm not supposed to pay it. Then he can go back to the accountant and say, you know what, these are the new tax rules. How is it communicated in such a way that even a 5-year-old will understand what the new tax laws are all about? I just said I should quickly chip that in when it comes to Yomi's comments, which I felt were quite interesting and eye-opening. But there is a need not just for implementation, there's a need for adequate communication to the necessary time. Teriba had said, I'm in total agreement with Dr. Teriba, quite honestly. Proshare has consistently pushed this narrative that it is important that we balance the debt situation with the possibilities of idle asset activation. In other words, can we have a GSM moment where we're not looking at generating money just from debt, which has become almost like an integral part of the fiscal arrangement? We have a gap, and so what we do is to borrow to plug it. No, we could do something different. And that's why I said earlier that we need to be bold, we need to be courageous, and we need to learn. We're not reinventing the wheel. It has been done before. We saw the tremendous progress that occurred during the GSM evolution in Nigeria. The Nigerian government didn't put a dime down, but it made massive revenues coming from those who got licenses. So we can license, and that's a low-hanging fruit. For instance, if you look at the mining sector, we can improve revenues from that sector quite easily. It's a low-hanging fruit. As we have said in the past, all we need to do is to be very clear about assets. Do we have a national asset register? With a national asset register, we understand what assets we have. So we know what we own, what we owe, and what needs to be done to generate revenue. Dr. Teriba has pointed the direction, and that's clear. We can decide that idle assets can be given a value. We can put them into deal rooms where we establish a value for it. And then, like India has done, investors from abroad can come in, identify those assets, and therefore decide that, look, we are interested in this particular transaction. We're interested in this particular asset. We are prepared to pay this amount for it. And so we generate the foreign exchange, which improves the foreign exchange market, where our foreign reserves, our net foreign reserves improves. And what that does is that it also brings down the domestic cost of inflation. So inflation rate begins to decline because you've had an inflow of dollars or whatever currency it is coming to invest in the country through foreign direct investment, not foreign portfolio investment. Foreign portfolio investment is buying shares. Now, we're going beyond that to say, no, you know what? We have opportunities. You can take advantage of these opportunities and you can invest X, Y amount of money under these terms and conditions. That is what Dr. Teriba, I think, was referring to when he was encouraging us to look at alternative means of funding the growth agenda. Because the government itself has clearly stated that by 2030, it expects a $1 trillion economy. If we're going to get to that $1 trillion economy, we're going to have to grow by about 15 to 17% per annum. Can we do it? Maybe not. But can we do something close enough to suggest that we're moving in the right direction and that we can trickle down the impact of thinking of our fiscal space? If we can do that, then I see great opportunities ahead. Rather than get stuck in the loop of borrowing to meet the gap that Dr. Teriba had earlier identified, what we should be doing is say that, you know what, shift away from the income statement. The income statement is just about incomes and expenditures to the balance sheet. Now, the balance sheet contains your assets and your liabilities. And we are saying, yes, get those assets in such a form that they generate a stream of cash flows that can improve the lives of Nigerians, even at the grassroots. Because when you have foreign investment funds coming in, they set up plants, they require labor, or they require labor in different types. I'm talking about the blue-collar worker and the white-collar worker. And we're talking about technology application. I think it was the same Dr. Fashua who was talking about artificial intelligence, was talking about technology. That will come when you provide me with the incentives to invest dollars in your economy. And that will trickle down to the grassroots. That is my perspective of this. What we need to do is to really rethink the fiscal aspect of our economy. Now, the monetary policy has been quite good. There has been a commitment to reducing inflation. We've been consistent in that. I think there could be some adjustments, especially when it comes to the cash reserve ratio, that I think at 50% might be rather high, and it's nudging domestic interest rates to be high. So the cost of funds to this same SMEs is rather high. We could do something. I think we could tinker with the cash reserves ratio, bring it down a notch, reduce the nominal interest rates, and perhaps enable the SMEs to get cheaper funds and expand their activities and improving the lot of the households who work in these SMEs. So that's basically my sum.
Thank you very, very much, Mr. Shitabe. Very clear that the implementation of the tax rules is important, but communication of the benefits is very critical to businesses and everyone involved. And of course, you've also concurred with what Dr. Teriba has said, rethinking fiscal policies, exploring value from our assets. It's very critical. So let me allow Mr. Lubenro. You've heard what Mr. Shitabe has said, that we need to get communication, proper communication of our benefits to businesses and of course, people involved. And also, I would add to this, Nigeria has committed to zero duties of 90% of goods under the AfCFTA. How can the Trade and Investment Ministry ensure that local industries remain competitive against cheaper imports while still benefiting from expanded regional trade opportunities? So those two questions into one.
Okay, thank you. I'll attempt that as quickly as I can. And maybe also touching on what Dr. Teriba said, particularly with respect to her concerns with regards to implementation. So, I can't speak to the politics of it, and we also do know that politics trumps quite a lot of things in this part of the world.
Yes.
But the reason why the time lag was necessary is that even our national tax policy requires that when you make changes to the law, you require a minimum of 90 days, 3 months, to allow taxpayers to get ready. Because if the law is supposed to tax them more, and then the next day, people who have, design their own business, run their models and all of that, just overnight have this rule change, it could be a challenge. Not the least this type of a holistic reform. So we really need time for both the taxpayers to get ready. Systems needs to change, applications needs to change, team needs to build knowledge and understand what the new law says, and the revenue authorities also needs to get ready. And so that, for me, is the reason why this 6 months was necessary. In fact, if anything has been done otherwise, it could have made a mess of the whole law, and you will have seen the entire tax-paying populace be at loggerheads with the government, because you didn't give us enough time to get ready, and change our system. But I agree totally that, there is always that concern, and I think it's really for the government to then, make sure that the agencies of government and all of that, really work at ensuring that that narrative, is not our reality. And that's where the, comment from Shitabe comes in. So beyond getting ready and implementation, building capacity, communication and public sensitization is huge, because this is a monumental change. There are many other things within the law that are just new things that are supposed to benefit taxpayer. For example, we have the new tax ombuds. How is it going to happen? What is the processes? How do I ensure, that I benefit from it? Or if I'm an SME, do I need to be filing my tax returns, before I will get the relief back? What do I need to do so that when I transact with large taxpayers, the old tradition of withholding from my income is no longer done, and all of that. So quite a lot needs to happen. And I agree that what the agencies of government, particularly the Nigerian Revenue Service and all of the state internal revenue services, what they should be working on now, and what we believe they are doing. I don't work at the NRS, but what I believe they should be doing, what is critical now, is really to be working on those implementation guidelines, those circulars, those, FAQs, frequently asked questions, the process flow. So we really need to get to that. We need to be hearing a lot more. Let the public engagement, let it come in multiple languages. Let it come in English. Let it come in our 3 main languages, and let it even come in Pidgin, so that people understand, particularly the one that touches on the poor. And then for the large, businesses, this is a time to really invest in building capacity within the finance team, and ensuring that they understand the law, and let those within the finance team also recognize that this is a time for self-development. There are many fora for free webinars, for paid training sessions that businesses could do. We really need to do that, because no matter how much all this headline 2 minutes, 3 minutes of quick videos will provide highlights, you need to get into the law to really understand, how it really works. Large businesses are doing impact assessment now. They are doing readiness, changing their system and looking at their models and their projections. That's what businesses need to be doing now, and ensuring that you understand how does it impact you. We speak a lot about the ones that provides incentives and benefits. There are also provisions that essentially makes part of the processes to be so refined that penalties are stiffer. In some cases, you may have to pay slightly more, to enjoy some reliefs. The incentives have been reformed. No more tax holiday. Some of those tax, rebate here and there. Some of them have been, aggregated into a different scheme. So businesses can really sit back and expect that it's only the government that will only do the sensitization. The sensitization is good, but for the general populace. Large businesses should be doing impact assessment. They should be building capacity. They should be engaging service providers that could help them, transition. They should be setting up project management offices, because this is a huge change, right? And if I can just touch on the second question, not because of time, you spoke about AFCFTA and the fact that we have zero duties, on 90% of goods. How does that impact us? I think the AFCFTA itself is a huge opportunity for the continent. With over 1.3 billion people and maybe nearly $3.5 trillion economy. That's huge economy. A huge opportunity for local industries in Nigeria to play and play on a continental stage. And maybe just to explain what is meant by that 90%, that you refer to, what happens, what the AfCFTA has done, what all of the African leaders, government have done is to say all of the tradable goods, we classify them into three. The liberalized, the one that which is the 90% you are referring to, which is where you have all the tariffs removed, and there is a times range, for all of that to happen within, 0 to 5 years. So some countries, depending on the level of development, will probably remove all of those tariffs within 5 years. We have a few southern countries that have done that. In Nigeria, for most ECOWAS countries, it's around 90, it's around 10 years. All right. So the tariffs will be removed on those 90%. And you also have the 7% sensitive list, all right, which you are watching, and you have a longer time span before the tariffs will be removed. And then you have the 3% that is excluded. Now, what's the liberalization of tariffs on the 90%? What it means is, is that competing product from other African countries will also land on our, will land in our countries. All right, in the early years with zero tariffs. So what it means is that locally produced equivalents may not be able to compete, with those imports on the basis of price if we do nothing to ensuring that we're able to optimize production, we're able to make doing business a lot much easier, and make our local manufacturers and local businesses to be competitive. That's what we need to do. But because this is a reciprocal agreement, all right, the principle in trade agreement is based on reciprocity. So this will also be the same for our own product that is heading into those African countries. So, and that's why what we need to do is to make sure that businesses in Nigeria are competitive. What does government need to do to ensure that we make doing business in Nigeria easy, we make it cheaper, we provide infrastructure, so investing in infrastructure, for example, transportation, logistics, power, simplifying the ease of doing businesses, and just making sure that even including non-tariff barriers, that we remove it and make our businesses to be competitive. All right. The country also needs to be very careful and make sure it judiciously use the sensitive and exclusive lists. All right. The Trade Ministry should look into how do we protect, the weak, all right, and priority industry. The countries could say, oh, for this item, I'm going to keep them on the exclusive list, or they are sensitive enough for the country. And so in order to protect the local manufacturers and local industry in that particular area, we keep them on sensitive list and make sure that we just don't open up everything for products and service and product area where we don't have the competitive edge, or at least in the short term. And the country should also ensure that there is strict enforcement of the rule of origin, at the border, so that AfCFTA does not just mean open your border for just about anything. There is a serious need for us to ensure that the protocol and the process around making sure that the rule of origin protocol is maintained. So we should ensure that there's strict compliance with this. So how do we verify the certificate of origin, that is bringing product into the country? I'm not talking of just making bringing goods more difficult, but I'm saying we need to be at alert. We need to ensure that the rules are clear, the processes are simplified. But what we really need to do, or what is of a greater importance, is how do we ensure that Nigeria, with its large population, all right, with the huge potential opportunity for SMEs and for businesses, how do we assist them to understand the process, do their business and make their business more competitive, and have a lot more outbound business opportunity than more inbound? Because quite honestly, Nigeria will be the attractive market for everyone. Everybody wants to come and have a share of the 220 or 230 million population. All right. And so it's really how we play. But for me, I believe it's a huge opportunity. But how do we balance trade liberalization with ensuring that we protect industry? all right, that that operate locally, and make sure that we empower their competitive edge. And that's really what we need to do.
Thank you very much. I mean, interestingly, we are seeing some questions coming in, so we're going to soon go to questions. I just want to take Dr. Teriba. Dr. Teriba, as an advisor on sovereign and subnational economic issues, what structural and policy reforms should we deploy at the subnational level to enhance growth, sustainable economic growth? Because it's not just about the national level, but the subnational should also be pivoting growth and attracting investments and tapping into opportunities.
Okay, well, the nature of the Nigerian economic situation is such that the dice is loaded more in favor of the federation, with the federal government in the driver's seat and the state governments largely in the passenger seat. You can see the debate or the controversies about the tax reforms. States, the best the states can do is to try to convince the big brother to listen to them, because many of the items are on the exclusive list. The items in the things that matter. We have commended the present regime on the progress they have made with the foreign exchange market reforms. The states have no role to play in that. The states are as powerless as private companies as far as foreign exchange market reforms are concerned. We have commended the government in the progress they have made in energy pricing reforms. The states and companies are passengers. And of course, the tax reform, unless so is the laws have been passed by the National Assembly. Togba is not happy, that I describe it as a jolly ride to nowhere. A network was breaking, so I don't know what your response was. But the point is, do you need to pass 4 bills on the same day? Do you need to defer the implementation of 4 bills by 6 months? Can you not face the implementation? Can you not drop benefits that can be dropped now, even if it's mere housekeeping benefits? Changes of nomenclature, unification of harmonization of must everything wait for 6 months? That's the point we're making. And again, states are in the passenger's seat. Then in the super highways that the government is making, the railway, states have no say than to complement what the federal government is doing. So please don't shift the focus of the attention. That's why a lot of focus is on the presidential elections, on the presidential candidates. The president has been commended for the things he's done right. I have expressed my reservation about the slow pace of the tax thing, and much of what Yomi is talking about eloquently, which is how Taiwo Dele will sound, which is how Tokpe Fashua will sound on the tax reforms, are not reality.
All right, noted,
and
Dr.
I am not going to. Nigerian economy is in a desperate situation. So Nigerian economy is in a desperate situation. I cannot listen to deferred solutions. I want solutions for now. And if you have worked for 2 years, 80 people working for 2 years, you can't find benefits. You can drop within 2 years. I'm sorry. I have run out of patience. If you haven't, Tokwe didn't hear the things I said to commend the government. He only is not happy about what I said, about it. And then I'm not as optimistic about the benefits of the tax reforms in an economy that is shrinking. You don't play up tax issues in an economy that is sinking into decline. Tax is a pro-cyclical instrument. It's something that you gain from when the economy is on the expansion. When the economy is contracting the way our economy has been contracting, you give subsidy, not taxes. that you spent 2 years trying to do tax reform in a shrinking economy. Anyway, you can say that companies are now beginning to boom from the benefits of the two reforms that we have mentioned. And so hopefully, the monies they pay to households will mean that GDP is picking up, inflation is dropping, exchange rate is stable. So you may argue that by the day they implement, but I'm not too, optimistic about taxes. Taxes are revenue or recurrent income. You can't fund capital projects with taxes, even if you get the best of results. So you need to speak to national assets, not subnational or federal assets. Most of the assets that we are saying that they should unlock liquidity from in real estate, in infrastructure, or in state-owned companies are federation assets, not federal assets. So states should continue to support the federal government and encourage the federal government to do what it did in the GSM telephony by opening the space to investors, to do what it did in LNG, and if we can do it in power transmission, if we can do it in rail, and we can do it in the digital, the super highways, especially through integrated rail projects that incorporates power transmission, gas pipelines, and fiber optics. Funded by investors, Nigeria will be there sooner rather than later, will be my view.
Thank you very much, Dr. Teriba. Your points are well noted. Like we said, this is a very interesting exchange. I mean, even globally, we see notable economists express their views tactfully on issues around policies. But you've said it clearly, just like our chairman said in his opening remarks, we need that GSM moment translated to the power transmission, to rail, and other critical infrastructures. But it's all for a progressive and sustainable economic growth. Very clearly noted. Mr. Shisabe, I'm coming to you about the capital market, which is pivotal to any economy. So how does the capital market play into this in terms of translating or bridging that transition gap between policy announcements and tangible economic benefits for businesses and households? The capital market is where wealth is created, legitimate wealth is created.
Thank you, Otto. I must say that even the money market is also where legitimate wealth is created. But
okay. Yes, generally.
Yes, but you are quite correct.
Yes.
You want to fund long-term projects. Basically, what you should be doing is to look at long-term sources of funding. And that's why I had said earlier that what we should be looking at is the balance sheet side of the national economy. Now, what Yomi has said about the incentives and everything is very good, very good. But if you want to develop the SME sector, if you want to develop larger businesses, I mean, the Dangote refinery is estimated at $20 billion. If you want to do those big ticket transactions, you cannot go short term. The money market is essentially meant for working capital needs. If you want to do long-term capital projects, like what Dr. Teriba has said, the super highways of this world, if you want to develop railways of this world, if you want to develop these kinds of national assets, you're looking at long-term funding. And the capital market is where those long-term funds are supposed to reside. Unfortunately, in Nigeria, the capital market has grown, undoubtedly, but it hasn't grown at the pace and in the direction required to support these kind of long-term projects. And that's why we've argued in Proshare that what we need to do is to have a national asset register. Now, when you've created that register, you identify those assets that you can get foreign direct investment involvement. All the government needs to do in respect of some of these assets is to provide licensing. And in some instances, Dr. Fashua talked about, there'll be resistance to the sale of national assets and all that. Granted, that is a concern. However, you don't have to sell those assets. That's the point. Those assets don't need to be sold. If you have a creative and active and agile capital market, you can put structures in place that give you the opportunity of long-term financing over maybe 15, 20 years, even 30 years, and you will still get those deals done. The assumption is that, look, we're talking about sale of assets. No, you don't have to sell. You could lease. You could do long-term leases. You could create, actually, from those assets, liquidity in an active market like you call the capital market. You could create those and you could trade. You could throw those instruments, those long-dated instruments. You can trade them in that market. So it is not just about selling national assets. Let me give you an example. The National Stadium Surulere has been idle for how many decades? Perhaps 3 decades. It's not generating a stream of cash flows. We're saying that you could take the National Stadium Surulere, for instance, and say, you know what? I want to invite a foreign investor to come and put down money here. He can invest in a national stadium, long-term assets with all kinds of structures around that asset. It could be a fixed rate instrument. It could be a floating rate instrument. It could be what in finance they call a mezzanine instrument, which has equity and debt components. It could be whatever, but the capital market needs to be that place where that kind of long-term funding comes from, and not the money market. The money market is a 90-day, 180-day market, essentially. The longest you get in the money market is 365 days. And that isn't long enough. That isn't patient capital that is required to fund the growth Nigeria is expecting. Like I said before, the government has clearly stated that it wants to achieve a $1 trillion economy. If you're going to achieve a $1 trillion economy, you certainly can't rely on your money market to provide you the funding. You need the capital market to provide the 10, 15, 20-year kind of resources that will enable you to put those infrastructures in place, to be sufficiently patient to wait for those cash flow returns to kick in. And so, yes, you're quite correct, also, we need that. For instance, let me give you just a quick instance. When last have you seen a municipal government bond? You talked about the grassroots. You can't get smaller in terms of administration than the local government. But Nigeria has not had any local government bond issue in recent times. As a matter of fact, the last time you had a municipal bond was a market in Lagos. And that's over 40 years ago. Since then, no local government has been able to access the capital market to raise long-term funds. Even states themselves have sparingly, maybe a state like Lagos, I know Ekiti State did that in the early 2000s, and a few other states have been able to access the capital market for the purposes of funding major projects. We need to start activating the capital market opportunities for the purposes of ensuring sustainable growth in the national economy. It's as simple as that. It's not too complicated. And we can always find creative ways of creating instruments that investors can put their money in over a long-dated period, and they'll get the required returns. Certain superhighways, for instance, can be tolled. We could actually adopt Sukuk, which we have started to do, but we could do it on a much bigger scale. We need to be more imaginative. It's like Proshare had really said earlier in one of his reports, we need to be bigger, we need to be bolder, and we need to be dominant. We must be prepared to see ourselves as giants rather than Lilliputians. We must see ourselves as giants and play from the mindset of a giant rather than from a mindset of a Lilliputian. You can't grow above your aspirations. If your bar is high, throw your heart over it and your body will follow you. So perhaps that's also my short take on that.
Thank you very much. Thank you for bringing those memories, Mr. Shitabe, about the municipal bond. Of course, as a Lagosian that you are, other local governments just have to learn that experience 40 years ago. But I mean, we'd like to see that happen too. And states, with the Investment Securities Act, which has been signed into law 2025, states need to assess the opportunities now to leverage the capital markets. So let me get to you, Mr. Lugbenro. I know that the Fiscal Policy and Tax Committee has been on the front burner today, but I believe you have a lot of take-homes in terms of what must be done to implement and communicate tax policies. But just in 2 minutes, please. Nigeria in the AfCFTA, you've talked about the issues around rules of origin and competitiveness. We'd also like to know, in a $3.4 trillion market projection, the HS code adjustment is very important. What is your take on this and improving our trade volumes? Because Intra-African trade is good, but Nigeria must be on top of it.
Right. Thanks. And I mean, maybe just to clarify, I mean, when it comes to HS codes and the classification, there's really no reorganization of HS code per se, because these are universally determined, but we have the last 4 digits that may differ from country to country. That's really where we are, where we're coming. But to really answer your question, I think we can increase our trade volume in Nigeria by leveraging the framework and being deliberate about how we communicate, how we empower our businesses, how we ensure that we leverage the opportunity and not just being reactive. And I can share maybe some couple of points. For example, it can be as simple as making sure that we understand the new terrain, the AfCFTA terrain. For some context, there are 54 countries that have signed the agreement, right? 48 have ratified it, but there are about 38 that is currently participating in the pilot phase, which is the running to test the real-time readiness under the AfCFTA rule. This is what we call the GTI, the Guided Trade Initiative, and 38 countries are under it. Nigeria joined in the GTI in 2023, but is currently exporting under this scheme to only 5 countries, right? There are 38. We're only exploring currently with Cameroon, with Kenya, with Algeria, with Uganda, and with Egypt. Those are the 5 countries, meaning that we're still currently leaving out the remaining 33 GTI countries untapped. Now, this limited reach indicates that while we may be making progress, we've not really fully capitalized, or explore the full potential. So how do we ensure that we maximize and tap the full potential of the opportunity, and Nigeria is at the forefront rather than late joiner or being reactionary, right? As of 2022, only about maybe 10% of Nigeria's total export were directed to African countries, under the AfCFTA, right? Majority of our export are to non-African countries, primarily the crude oil that we sell to Europe and Asia. I think in a report by African Future, it was stated that if Nigeria improves its utilization, under the AfCFTA, Nigeria will be one of the 5 major exporters in about 20 years to come. And we will account for like 40% of the continent's total export. So in terms of gain, we could see Nigerian exports increase by 40 to 50%. That's huge number. All right. So in value term, Nigeria could add between 12 billion and maybe 20 billion in non-oil exports, over the next 10 years, if we can really harness the potential of trading on the continent. Right. Also, sectors such as, say, agriculture, manufacturing, services, they will experience significant growth, meaning that our local producers will be able to access duty-free entry to all the countries, even if we limit it to the 38 GTI countries. So it's really how we're taking the bold, we're communicating, we are empowering businesses, and we are making Nigerian businesses very, very, very competitive. Businesses also need to know a lot, about what's going on, because at the end of the day, government is supposed to provide the enabling environment, supposed to make doing business easy. But businesses also need to be at the driving seat, of how do you want to position your own businesses. All right. How do you want to, gain knowledge of what is going on, what is available, what is possible, what do I need to do, like the rule of origin issue that I mentioned, because this is, the same way that Nigeria is going to be opening its eyes and ensuring that, countries importing into countries comply with this rule, the same way other countries going to be looking at the rules. So how much of it do the Nigerian businesses know, and how ready are we, right? Because to really fully benefit from this, Nigerian exporters must also understand and comply with the rule of origin. They must use the correct HS code. They must obtain the appropriate certificate. They must meet what packaging, quality, regulatory standards, that the partner countries have set up. So businesses needs to gain knowledge and really be driving this. So it's really how much proactive measures are being taken both at the government level but also at the businesses level that will really determine how much benefit that we can leverage under these arrangements.
Thank you very much, Mr. Yomi Olugbenro, for your very clear response on the AFCFTA, how we can leverage it, and of course the HS codes. Interesting to hear about the GTI and a lot of things to watch out for. Again, we have to be strategic economy. Thank you very much for participating in our third poll. So let's quickly go to our Q&A session and then we get back to our panel discussants to wrap up. First question, of course, Dr. Teriba, this is from your friend, Mr. Marcelo KK. He says that you shared about the gains of the reforms from the foreign exchange to energy and some of developments in the telecommunications sector. But he's asking for the cost of reforms. If you can respond to this in a minute. Thank you, Dr. Teriba.
Okay, and am I audible?
Yes, you're audible.
Okay, thank you very much. Marcel, how are you? Yeah, yes, I know that many of the critics of the government speak about the cost of reforms without speaking about the benefits of reforms. And neither economics, nor finance, cost or benefit. It's benefits net of costs. When you are trying in economics, when you are trying to look at the cost of reforms, you start with the cost of not reforming. And whether you are talking about the multiple exchange rate regime or the energy subsidy regime, all Nigerians, without exception, all the presidential candidates when they were campaigning were unanimous in saying that the multiple exchange regime imposed costs on the economy, leakages on the economy without sort of no benefit to the Nigerians, was of benefit to those who enjoyed the subsidized exchange rate and those who enjoyed the subsidized fuel. And we're talking about leakages of about 20 trillion. Total leakages of about 20 trillion naira from foreign exchange, the multiple exchange rate. Mind you, even under the Buhari regime, the prime market exchange rate was already 700 or 800. But may President Buhari so rest in peace. But the central bank that was managing that segment for him was in denial, was trying to suppress the truth about the parallel market. And the prime market was reality, whereas the own fixed exchange rate of 300 or 400 was alternate reality. So President Tinubu saved Nigeria from that huge loss in unifying the exchange rate. That's one benefit, which both Alhaji Atiku and Mr. Obi said they would also save Nigeria from. Marcel, if you remember, that's the foreign exchange. Even in the subsidy, you are giving subsidy, but you couldn't pay for it. You had no budgetary provision for it. The NNPC was suffering. So removing that subsidy saved Nigeria those costs. Now we are saying that additional benefits has followed. That unified exchange rate, yes, you could say the private market exchange rate that was 800 is now 1.5. So, and you count that as cost of the transition. Yeah, but the improved supply that has lifted the net reserves from less than $4 billion, when the regime came in, to more than $23 billion now, is concrete benefit, and we now see stability in the market. and our companies are thriving both at home and abroad. And then in the cost-reflective reforms of energy, you could see Dangote refinery thriving, giving price cuts and promising to distribute across Nigeria free. If they didn't do that reform, there's no way Dangote will be able to offer those benefits that it's offering to Nigeria that it is offering. And we hope that government refineries will soon also be able to supply, and so those are the benefits of the reforms, Marcel. And the way the government can deliver additional benefits, to Nigerians is to fast track what they are doing about the fiscal reform. Yeah. Look at non-debt financing options. Look at non-tax revenue options. Look at non-oil revenue options. So move away from debt, move away from taxes, move away from, because the economy is in decline. And that the question you had asked, I would like to chip in about capital market, is that government supports a very active, but then government does not participate in the capital market. Government owns big companies, including NNPC and its subsidiaries, National Transmission Company. They are not listed in the stock market. All the big companies in Nigeria, including the GSM companies that the government brought in through the liberalization, are listed in the stock market. They raise money in the capital market. There's no government company in the capital, including the LNG. So unless the government lists public companies in this capital market, I'm sorry, the capital market cannot go and drag them. They have to surrender that. And we have been postponing the listing of NNPC. President Buhari scheduled the listing of NNPC, then postponed. And now the new management in the NNPC is saying that 2028. And when 2028 arrives, only God knows what the people who will be there then will say. So we should encourage the government to list in the capital market and not just confine its fundraising activities to money and bond market.
Thank you, Doctor.
Thank you.
Thank you for those insights. Yes. To Mr. Yomi Olugbenro, of course, you're in the Fiscal Policy and Tax Committee. A question from Alfred Chaka is saying that, look, with all these reforms, how does it translate to sustainable economic growth? How do businesses thrive? How do the common man, how does it improve the high cost of living? Just in 1 minute, your response.
Well, I think some of the comment we made earlier is relevant in addressing that. One,
yes.
We've touched on implementation. What has been signed into law will not be benefited until it's implemented. So, and close to that is the communication. So people also really need to have insight and clarity, beyond just the headlines. And like we mentioned earlier, it's a two-way thing. A lot needs to be done from the revenue service side, the government side, but also a lot needs to be done from those who are to benefit. Everyone needs to take an active interest, not a passive interest, in how does it impact me. So if you are seeking to benefit from the reform, I think the responsibility is also on you to seek to know what is actually, has been provided for you, and making sure that you leverage the opportunities that is there. As much as is possible, if the benefit is for you, I think the burden of seeking them out and trying to understand how they're working around it, it's a lot of that is going to be on a number of the individuals. So the law only provides the framework, but fundamentally, like where we started from, I think getting this thing down to the micro levels and the trickle down effect will really continue to depend on what we're really doing with the benefit that the macros had offered. All right. So exchange rate stability does not in itself just provides the benefit. Stability is not necessarily the recovery. At 1,005, it might have stayed within that range, for a relatively long enough number of months, and we will praise that for being stable. But we've moved from, whatever it was, whether you're looking at the official or the parallel, we've moved from either a 400 or a 750 to now, 1,005. So the pricing point is different. So the additional resource that is available to government, can we see a lot more? Can we demand a lot more in making sure that the investment in infrastructure, the investment in human capital, we can see a lot more of that? Can we hold our leaders a lot more accountable? Can we demand more, dividend of democracy, not just at the federal level, but actually across the tiers, of government? I think quite a lot of questions get asked to the federal, and justifiably so, because of the way our polity work and our governance work. But a lot of questions also needs to be asked and directed at our subnational leaders, and our local government leaders. The local government election happened this last weekend. You can tell in Lagos, you can tell the percentage of people that even knew or participated. So these are some of the cultural shifts, and active citizenship that we also need to unleash to be able to leverage and demand a lot more dividend of democracy from the government.
Thank you very much, Mr. Yomi. And to wrap this up, from Dr. Funke Medun, of course, member of the board of Proshare, she's asking, very interesting session, but in looking at everything, what is the key takeaway for small businesses and households? So I'll ask Mr. Shitabe to wrap that up in 1 minute. What's the key takeaway for households and businesses?
Okay, thank you. I think Yomi actually answered that because he talked about a more active citizenship. Citizens need to be more active, need to be more engaged, need to want to know. So it's not just about them knowing, but they need to want to know. Because if you stay on the sidelines, nobody's coming to you to educate you about how you can leverage opportunities in new tax frameworks or anything. Yes, the government has a responsibility, but the citizen also has a responsibility. So that's one takeaway from it. Another takeaway is that there are going to be great opportunities through the African Continental Free Trade Agreements that Yomi also talked about. It's about how do you position yourself? How do SMEs position themselves to take advantage of the opening up of the African economic space? If you're not ready for that, then you could have significant challenges going forward, because other African countries won't wait for you to get ready. They will start exporting to Nigeria at competitive prices, and they'll basically ease out the domestic micro industries. And no, there'll be nobody to blame but ourselves. So the micro enterprises will need to be more engaged.
Well,
I'll expect that Yomi can't run away from the fact that the opportunities and the advantages that are possible through the AFCFTA must be communicated to the micro enterprise. And that's why I emphasize communication. You've got to appropriately communicate that.
Doctor, if you can mute, Dr. Taylor, if you can mute your, yes, mic, sorry.
Yeah, so once they see what the opportunities are, Nigerians are tremendously bullish people when it comes to enterprise. They are very, very agile and active, but they need to be directed towards what needs to be done. So once they are correctly directed to what needs to be done, they'll know what to do and when to do it. It's not just about knowing what to do. You also need to know when to do it. And that speaks to what Yomi has said earlier. But if you permit me just quickly here also, I must say that really and truly, I agree with Dr. Terry about that. It is unconventional for you to want to increase taxes in a shrinking economy. But so that's the reason why the tax laws that we have today need to be incentives to grow the economy. And then that incentive is tax. So far, what I see is that what is being done is that the simplification of the taxes, the concessions made, the elimination of multiplicity of taxes that is so confusing that everybody's head spins, all those things are designed towards encouraging enterprise and promoting the enterprise. So once the enterprise starts growing, you move into higher tax brackets, and then the government should see more sufficient revenues to fund these operations.
Thank you. Thank you very much. Thank you very much, Mr. Shitabe. Very interesting conversation, very engaging Q&A session. I would just like to enjoin all our participants to join us in the last poll for the day, the last final poll for the webinar as we begin to wrap up. Thank you. Thank you very much and for participating in all our polls for today. So as we round up, we'd like to get our speakers to each give their closing remarks in 30 seconds each, beginning with Mr. Yomi Olugbero.
Okay, it's a thank you. It's an appreciation for the conference. I think it's been engaging. Like we said, particularly for the participants, I think they should take very active interest in knowing what to do when it is required, and taking advantage of whatever opportunities that the reform have might have offered. It won't be. It may not necessarily deliver all that you're looking for, but a significant effort has been invested in across. So seek to know and take advantage of what is available.
Thank you very much, Mr. Olugbero. Mr. Shitabe, Teslim Shitabe, yes.
Also, my message is, and my closing thoughts is just this. Nigerians should be prepared to make big moves. That will separate us from the rest. Big ideas, big moves. And I think we're on the path. We only need to push further. Thank you.
Thank you very much. And Dr. Teriba, a closing remarks in 30 seconds.
Am I audible, please?
Yes, you're audible.
Yes, Doctor, you're audible.
Okay.
You're audible.
Thank you very much. Good session, good exchange of ideas. Government is commendable, for progress made with the foreign exchange reform on the macro end and the sectoral reforms of energy and infrastructure in general, including transportation and infrastructure. But government needs to do more about the fiscal reforms. Revenue last year was less than 10 trillion, but this year's budget is 55 trillion. So how are we going to be able to, do that? So comments have been made about looking beyond taxes and opening the door for equity financing. I do hope that government will take this to heart. You can give excuses. If you don't want to do something, you give excuse. If you want to do it, you will find a way. And where there is a will, there is a way. If the government does want to raise equity, government will raise equity.
Thank you very much, Dr. Teriba. Very interesting.
Thank you very much for the opportunity. Thank you all for your attention.
Very interesting exchange, yes. I would like to thank all our speakers for making this webinar worthwhile. Dr. Yo Teriba, CEO, Economic Associates Limited, Dr. Tope Fashua, Special Advisor, Economic Matters to the President, Mr. Yomi Olugbero, Partner and West Africa Tax Leader, Deloitte, and of course, in-house, Mr. Teslim Shitabe, Director of Research, Proshare. We appreciate you for taking out time from your busy schedule to provide your rich insights on the Nigerian economy. To our participants, we appreciate you for joining this 2-hour webinar, which I believe has been of immense benefit to you. You can log on to our website, www.proshare.co, and follow our social media platforms to get updates on our research, analysis, and interventions on economic and financial market developments. Thank you for being a part of this webinar, and have a great day.